हाय एवरीवन, जय हिंद, जय भारत, जय माता दी। वेलकम टू माय यूट्यूब चैनल मोचन एवी रिकॉर्डेड। मेरे साथ है राजीव, कौशिक सर। और आज का क्वेश्चन टुडे इज़ वेरी इंपॉर्टेंट सर, एंड दिस हैज़ बीन आस्क्ड मी बाय वन ऑफ माय फ्रेंड्स, एंड दैट इज सर, इन एनपीएस, पीपीएफ एंड ईएलएसएस, which one is better for mariners in terms of investment on a long term up to 20 years? So the first thing, I would love to know what NPS, PPF and ELSS, and then I would love to know which one is better.
Yeah, so I will start from PPF.
Okay, sir.
Firstly, when we talk in terms of investment, it need not be this or this or this. It can also be this and this and this. Because we are here to build a diversified portfolio where we have equity mutual funds, where we have debt mutual funds, where we have NRE FDs, where we have FCNR FDs also. If the rate of interest is good, why not? We also can think of NPS. We are not allowed to invest in NPS in our own names, but our spouse can invest in, can save in NPS, and we can do ELSS also. So it is a whole thing. Now, what is ELSS? ELSS is a mutual fund. It is one category of mutual fund where you the money that you invest stays locked in for 3 years from that date. And for this, the money is also qualifies for tax deduction of 80C, at least till now. In future, this might go away. That means that if suppose in one particular year, like we were just talking about SIP, if you have made a SIP of 12,500 rupees so that it accumulates to 1.5 lakh for 80C, then the date of maturity of 3 years of all SIP installments will be different, right? Now, because NRIs or mariners are non-residents, they don't have to pay tax, so you don't really have to invest in ELSS because it is a product only for tax saving, and for 3 years it remains locked in. Now, there was a thinking that ELSS, because the money stays with the fund manager for 3 years, he is able to select his stocks in a better way, so it gives better returns. But data has shown that it is not like that. It may not be like that. So, if you do it, it is also good. If you do not do it, it is also equally good, because we say that invest for a very long term. So, if you are investing for a very long term, selecting a normal mutual fund for 20 years is as good as selecting a ELSS or not. Now, let us come to PPF, a Public Provident Fund. It was a scheme which was started by the government, I think, in 1956, by way of which everybody could open their account in post office and some selected nationalized banks. Now you can do it in private banks also, by way of which you could put in a fixed amount of money, which earlier used to be 60,000, then 75,000, now it is 1.5 lakh. But earlier when it was 60,000, the rate of interest was 12%, now it is only 7.1%. But the catch here is that it is now only open to the residents. That means your parents can open it, your spouse can open it, your children, you can also open it in the name of your children under guidance, your spouse or your parents. But if your wife is you're opening it, then your wife's contribution and your children's contribution should not be more than 1.5 lakh. One very good advantage which only happens for PPF is that the contributions are totally exempt at the investment stage, at the growing stage, and also at the redemption stage. There is no tax levied. This is the best part of PPF, and for that probably the reason that government has still kept the amount low as 1.5 lakh, because after all this is the money that you are loaning to the government. The government is paying you interest on that. So it is good to have this, and I would suggest that the people who are married should have a PPF running in the wife's name. If they have children, they can split it between the wife and the child, or if they want to have a completely separate, then they can have the grandparent as acting as the guidance, because you also as an NRI cannot open a PPF for your children. So that is one thing. It is good to have, like I say, I really recommend it. Now the question comes about NPS. NPS, or the National Pension Scheme, was a very much desired scheme for everybody of the organized sector. Organized means where the people are getting the retirement benefits, the monthly benefits, insurances and everything, which is available even on shore, but not for people on board. So it was designed for them. And in this, also the minimum investment is it's 1,000 rupees a year, and the money is can be split in equity, government bonds, and private bonds, and you can select that, or it can be automatically selected. But the rules for NPS are changing so fast every year that sometimes I become in favor of that, and sometimes it becomes difficult to advise that whether one should open this or not. So all I can say is that even as a non-resident, you can open an NPS in your name, but my advice is to invest only the minimum required amount in that. For residents or those people who are paying taxes, it is just to tell you that apart from 1.5 lakh that you save in taxes by investing in ATC instruments like ELSS or PPF or your insurance policies, you can get an extra benefit of 50,000 rupees from your taxable income if you invest in NPS or National Pension Scheme. However, there are a lot of complications with NPS which makes it difficult for me to explain in such a short time. But this scheme can continue, can be opened only up to the age of 60, but can continue up to the age of 70. And at that time, whatever money is accumulated in your tier 1, now there are two tiers in this: tier 1, which is compulsory or voluntary, they say, but tier 2, which is more like a mutual fund, and it hasn't been shown to give a very good return. So out of whatever is matured after so many years, 40% can be tax free. You can take it out, and 60% has again to you have to buy an annuity. Annuity means you deposit it with a fund manager, and they will give you a annuity or a monthly pension based on the rates those days. Now nowadays these rates are based about 5 to 6%. Tomorrow if they become 2 to 3%, we don't know. So NPS is a very confusing product. The government has not been able to come out very cleanly on that. Even the senior IAS officers and the government officers and the government employees, they are quite confused at the moment that what will be the status, how much they will get after retirement. And this is when the government employees are getting 12% contribution from the government in NPS. But still they are not sure that what will be the state be. So I would suggest that you can open as an NRI, or even your spouse can open an account in NPS, but invest only the minimum amount. Let's say 5,000 rupees or 10,000 rupees a year. Or if you have to save on taxes, then maybe 50,000 rupees a year extra. But that is all. Do not treat NPS at the moment till government guidelines become more clear and more stationary, because now they're changing every year. So do not invest more money here. Please select your standard mutual funds, even with the commission or the expense ratio which you pay for your mutual funds. The product is simple to understand, easy to operate, easier to calculate the performance, and they are one of the most regulated products in the world. Yes, I am saying that the Indian mutual fund industry is one of the most heavily regulated industry in the world.
Okay. With heavily regulated you mean कि stability है, sustainability है and safety भी है.
Rules government के हैं, government keeps a very strict watch. If anything wrong is done by the mutual fund managers, it is immediately brought upon and they are penalized on it, as recently happened with Axis Mutual Fund. Some time back it happened with HDFC Mutual Fund, where the employees did some wrong thing. It was immediately caught upon by SEBI, and SEBI penalized them. So that is what we call regulated, that the rules are in favor of investors.
So sir, coming to the point, this question was NPS versus PPF versus ELSS. So if I talk about NPSs, you say don't invest more than 50,000 a year. That is maximum you can
Maximum,
go.
yeah.
If you talk about PPF as an NRI, I cannot invest on myself. It can be my wife, my daughter, my son, even my father.
Yes.
So and maximum 1.5 lakhs. So that's it.
Per person, yes.
Per person, yes. Yeah. So rest remains as ELSS or mutual funds.
Yes.
In terms of ELSS and
ELSS
mutual
is
funds,
also mutual fund.
it's equal
Same,
to mutual funds.
same.
So if we are looking for NPS versus PPF versus ELSS over a 20-year period, you say ELSS is better.
I would say go for all, but invest most of your money in mutual funds, which is ELSS or without ELSS also.
Okay. So I guess that's the answer, guys. Thank you very much. Let's keep growing. Let's keep learning. Let's keep this community together. Jai Mata Di.